In today's lesson, we are going to be looking at trial balance. Trial balance. That's a topic we are going to discuss very briefly in today's lesson. I want to say that students should be very deliberate and intentional about this particular topic when they are preparing for WAEC, NECO, JAM, or any external exams on financial accounting, because trial balance is a very fundamental topic in accounting that most examiners will want to find out the strength of a student in this particular topic. So I encourage students to make out time to understand the fundamentals of trial balance. And that's what we are going to be doing in today's lesson. We're going to explain some of the things that the examiner will want to test in the students. Now, trial balance, as the name implies, but before we go there, let's look at the lesson objectives. We want to look at what we intend to achieve at the end of the lesson. I have said before, it is a very important topic. We want to look at how we define trial balance, state the uses of trial balance, explain the rules of trial balance, and then describe the nature of trial balance and enter transaction into the trial balance. Now, what will be our yardstick? How do we know that we've been able to achieve our objective? Number one, if at the end we are able to define trial balance, we're able to state the uses of trial balance, we're able to explain the rules of trial balance, and we're able to describe the nature of trial balance and enter transaction into the trial balance, then we can beat our chest and say we have achieved our objective. All right, let's look at what trial balance is all about. Now, trial balance is defined as the schedule or list that shows the debit and credit balances extracted from the ledgers to show the arithmetical accuracy of the ledgers. What do I mean by list of balances? Trial balance, as the name implies, looking at it, trial is a period when one is going through tests. If you said you are arrested and you are going through trial, what they are saying is that they want to test if the allegation against you is true or is not true. So when you are facing trial is a time when you go through tests. Even as Christians, there are times when you go through one or two challenges, and then you can walk up to your fellow Christian or your fellow Muslim and say, please, so I'm going through hard time. I'm going through trying time. This is a trying time, a time where your faith will be tested if you really, really mean what you believe. So bringing it to the palace of accounting, trial balance is a list of balances. These balances are extracted from the ledger to test. What are we testing? The arithmetical accuracy of the ledger. The ledger is a principal book that is prepared by mere humans. So there may be errors. In the place of preparation, the accountant can make mistake. They can commit an error or a mistake. So what we serve as an X-ray or what we serve as a scan on the ledger is the trial balance. So the trial balance is an accounting scan on the ledger to find out if there are mistakes or errors, or what we call the accounting X-ray. By the time all the balances in the ledger is extracted and arranged in the trial balance, then you'll be able to know if there were errors or there were not errors. Now, the techniques ensure that the debit and credit balances as displayed in the ledgers are compiled. All the balances or the classes of account will be compiled in the trial balance. Now, the objective is to prove the accuracy of the bookkeeping. Accounting is a noble profession. We accountants do not want to play with people's hard-earned currencies. So they have different systems to test the accuracy of the process. So a trial balance is one of that system. It helps to find out if the transactions are objective enough. Now, we have said it is to test. Now, the uses of trial balance. Trial balance can be used in different ways. But for the sake of this lesson, we're going to look at it from 3 angles. Number 1, it helps in testing the accuracy of the double entry. It wants to find out if the double entry is accurate, if it is correct, if it is objective enough. And then number 2, it ensures that the debit and the credit balances as displayed in the ledgers are compiled. Every transaction in the ledger will be extracted and then will be arranged and compiled in the trial balance to check if they are what? They are correct. And then the last but not the least is that it helps in the preparation of financial statement. That is the logic, or that is the secret. Until we are sure that the transactions in the ledger are correct or they are error-free, we cannot prepare financial statement. Because if you prepare financial statement on a statement or on an account that is not error-free, the statement may not give the interested parties a true picture of the company. If you own a business and you employ the services of an accountant, what will determine the credibility of an accounting service is the nature of account prepared. If the account is not enough to give you a snapshot of activities within the period under consideration, then there is a challenge. So at this point, before you can prepare any financial statement, the account in the ledger must go through a scan. And that scan is the work of trial balance. All right, let's quickly look at the rules. There are rules, or what we call the principles, fundamental rules of trial balance. Number 1, you debit all assets. Number 2, credit all liabilities. Number 3, debit all expenses. And number 4, credit all income or gain. Students may not understand what assets, liabilities, expenses, income may be if they've not taken their time to study asset as a topic. But let me just give an hint. What we mean by assets are properties of a company that is owned and controlled by the company that has the ability to generate future economic value. The asset must be a property that is owned and controlled by a company, and that property must have that ability, must have what it takes to generate future economic benefit. And then they are divided into fixed and what you call non-current asset and what we call current asset. That's a story for another lesson. Then what we call liabilities. Liabilities are claims of outsiders over the business. Every business, as you buy from people, they may buy from you. So if you buy on credit, the claim of outsiders simply means your indebtedness to the outside world. That's what we call liabilities. We have the likes of capital, creditors, bank overdraft, and so on and so forth. And then expenses are costs incurred in the day-to-day running of the business. And then the last but not the least is income. Income could come in the form of profit or gain, and it may come in the form of salary, money that is earned, that is earned and not received, and that is received but not earned. Like discount received is an income. Discount received is an income. Reduction in provision for bad debt is also an income. Then net profit is an income, and then gross profit is also an income. Okay, so far we are looking. Now let's look at this rule. We said debit all assets. We said assets should be debited. Now before we really let me give a sketch of what it looks like. This is the sketch of what a trial balance look like. A trial balance, we have a trial balance of A, B, C, Nigeria. Let me write it very well. Trial balance. We have trial balance of A, B, C, Nigeria Limited at 31st. Okay. Let me start from here. Trial balance of A, B, C, Nigeria Limited as at 31st December. Let's take it 1997. Okay, and then we have the rule, the lines. It has just 3 columns. We have columns for particulars. We have column for particulars. We have column for debit and column for, this is your particulars, where the name of the transaction is written, and this is your debit and this is your credit. Let's put our Naira sign if we are using Nigerian currency. So whenever you want to post transaction into the balance sheet, you ask yourself, let's assume we have capital. Let's assume capital is about 50,000, and then let's assume we have plant and machinery. Let's assume is 40,000, and then we have, let's assume we have land and building. Let's assume this is about 200,000. 200,000. Let's assume we have creditors. Let's assume this is about 100,000. That's 150. Let's assume we also have loan. Let's assume this is about, this is 150,000. And then let's assume we have bank overdraft. Bank overdraft. Let's assume it's 40,000. Now, looking at what we have on the board, you see we have we have some transactions on the board. These are balances extracted from the ledger account. Okay, let's add debtors. Since we have, let's add debtors, should be 50,000. Okay, so now when you want to post transactions like this into the trial balance, you ask yourself, let's start with capital. Capital, is capital an asset, a liability, an expense, or an income? Remember, I said you should do what? Debit all asset, credit all liability, debit all expenses, and then credit all income. Okay, this is the rules. This is what we are going to look at. So the first thing you are going to do here, capital. Is capital a liability, an asset, an expense, or an income? Capital is a liability. Anybody that commits money into a business must always expect a return. So since capital is something you want to recover, is a liability. So you write your capital here. And then since it is a liability, what did I say you should do with liability? Credit it. You put your 50,000 here. The next one is plant and machinery. This is a very big, engine that is used in manufacturing companies. Machineries are just engines and some other tractors that are used on the site. So they are assets. They generate economic value. So you ask yourself, are they assets, liability, expense, or income? Plant and machinery is an asset. So you write plant and machinery is an asset. So since it's an asset, you have your 40,000 here. And then the next one, we have done that. The next one is land and building. Is obvious. Land and building is an asset. So how much is land and building? 200,000. And then the next one is what? The next one is creditors. We have explained that creditors are people that we are owing. So since creditors are liabilities, what will you do? You have to credit, creditors. Creditors, they are 100,000. Put your 100,000 here, 100,000. And then let's remove our rules here. All right. And then you put your 100,000. The next one is loan. This is loan, money taken from the bank. Is also a liability. So what do? You also credit. Loan is 150. And then the next one is bank overdraft. Bank overdraft. This is when the bank grants the permission or give the company the privilege to withdraw more than what they have in their current account. It is a what? Liability. You have 40,000 here. And then the last but not the least is debtors. These are the people owing you, and you have 50,000 here. This is how to go about trial balance. Now this trial balance, now you are not going to add this side and this side. You are going to add this side and this side. What we are saying is that by right, when you add, this is 50, 150, 340, you have 340,000 here. This is 200, this is 290. Now, this is an imbalanced what? Trial balance. At this point, it is very obvious that either at the point of extracting this transaction from the ledger, the figures were misposted, or during the time of preparing the ledger, mistakes were made. Because you see now that the debit side is not equal to what? The credit side. By right, when you extract the trial balance, this side is expected to be equal to what? This side. Now, if we want to make this side, let's assume that probably the difference between this 340 and 290, the difference is just 9. This is 15. This is 5. The difference is just 50,000. Let's assume that we have debtors. Our debtors here is 100,000. Let's assume that our debtors here is 100,000. If our debtors here is 100,000, what will be the result? The result will be 340. Here will now be what? 340. 340,000. You can now see that here will be what? Equal to here. At this point, we can say the trial balance, it was balanced. So, but the fundamental thing that students should take home is the rules. A lot of time you see students complaining, I don't know what to debit and what to credit. You don't need to stress yourself. This is the solution. The solution is get these rules at your fingertip. Debit all assets, credit all liabilities, debit all what? All expense, and then credit all what? Income or gain. It's just for you to know what assets are, liabilities, expenses. Once you know them, once you see the transaction, you already know that assets are meant to be debited, liabilities are meant to be credited, expenses are meant to be debited, and then income or gain are meant to be what? Credited. And once you have mastered this, to prepare the trial balance will not be an issue. Okay, so far we want to go to our exam guide to see if we can take some related questions from WAEC that will help us to further explain what we have said so far. So by the time you click on your exam guide, you have the options there. All the subjects are there. You see account, that is the subject we are discussing today. is account. And then when it comes to the year, you can choose any year of your interest. Probably you want to really find out what was said on this particular topic in a particular year. You can choose your year, but for the sake of this lesson, I decide to choose random. So I'll be able to get all the questions set so far under this particular topic. So I decide to choose random, and then the topic I already choose the trial balance. So once you have done that, you click on get started. All the possible questions under this particular topic will pop up. The first one says, which of the following items is not shown in the trial balance? Which of them is not shown in the trial balance? Now, the trial balance is always prepared at the end of the accounting year. It is prepared at the end of the accounting year. So if you look at all these transactions, you see that it is only one transaction that comes at the end of the year. That is closing stock. Opening stock is stock at the beginning. Closing asset value. This closing asset value is just what you have at the end of the value of the asset you have at the end of the year. And then opening debtors balance is also what you have at the beginning. So what is going to happen if you look at this? You see that closing stock, that is the stock you have at the end. And then closing asset value, that is the value of the asset you have at the end. So the answer is between closing stock and closing asset. And then looking at it logically, you see that the value of your asset at the end is something that is derived. You cannot really get it. It's something that is derived. So the answer is going to be the closing value of your asset. You can only see the opening value of your asset, but you may not be able to know the closing value of the asset until depreciation and some other calculations are made. So the answer is what? C, which is closing asset value. And then let's look at question 2. We have, okay, this does not really talk about what we have. Okay, which of the following items is found on the debit side of a trial balance? Very simple. We have said, look at the rule: debit all asset, credit all liabilities, debit all expenses, credit all income or gain. Number 1, discount allowed. Discount allowed is what you gave out to your customers. Discount received is what you received. Return outwards is the item you return back to your supplier. And then provision for doubtful debt is a money set aside to cover up a debt you are not sure of its recovery. So if you're looking at this, the only item that should be on the debit side of the trial balance is discount allowed, because it's an expense. When you give out discounts, you treat it as an expense. Discount received is an income. Return outwards. The return outwards it's going to be an income as well. And then provision for doubtful debt is a liability. And then so all of them will be on the credit side apart from discount allowed. Let's look at the fourth one. Which of the following item is found on the credit column of the trial balance? The transaction that should be on the credit side of the trial balance: carriage outwards, money paid on goods to the destination of your customer. And then provision for doubtful debt, we have said that it is a liability. Carriage inwards is what you spend on the money on your item from the destination of your supplier to the destination of your business. And then bad debt written off as an expense. So the first one is an expense, the second one is a liability, the third one is an expense, and the fourth one is an expense. So we have said you should do what? Credit all liabilities. So the answer here is what? B. Let's look at the next one. Cash payment of this. Oh, this is talking about error. Okay, we are looking at questions that center on trial balance. A list of all credit and debit balances from the ledger account is what? Trial balance. That's question C. And then, which of the following is not shown in the trial balance? Which of this is not shown in the trial balance? You see now, we have seen closing stock here. We have seen discount received. We have seen discount and opening stock. In this case now, on the hierarchy of what should be shown is going to be what? Closing stock. When we add closing value on asset and we have closing stock, closing value of an asset is the possibility of having that on the trial balance is very, very insignificant compared to closing stock. So in this case, discount received is an income. It should be debited. It should be credited. Discount allowed is an expense. It should be what? Is an expense. It should be debited. And opening stock is an asset. So it should also be debited. So closing stock is the answer. And then question 9, we have which of the following is not found in a trial balance? The same thing is closing stock. Closing stock. The next one, they say the temporary differences in the trial balance total is kept in the what? Suspense account. When you add up here, and then there is a discrepancy or there's a difference, that difference is actually posted to the suspense account until the error is detected and corrected. Suspense account is used to record errors detected until corrected. That is this question. That's number B. And then the last but not the least, okay, this is error. Let's take the last question. Okay, which of the following describe trial balance? It reveals the financial position of a business. That is not true. It is a list of accounting balances on the books. It's a special account that shows all the entries in the book. It is a what? List of balances. So far, that's as much we can take